confusion of today has historically cost people a lot of money. I did a piece earlier this week saying, don't trade these today. Invest in them next week after you sit down. But Bank of America was a very clean, good quarter. BlackRock is the one that I want to be in. Wells Fargo, when people hear the quarter and listen to Charlie Sharp, they're going to realize that this is the Consumer Financial Protection Bureau is now behind them. There are still more consent decrees, but they're almost there. There's still an asset cap, not as important as it was. But, David, a buyback that I think is going to be the most aggressive of any company we're talking about, or maybe even this year.
Wells Fargo.
Yes.
You think will have a very aggressive buyback?
Yeah, you're going to be in there buying it with them. I really like that.
One name we haven't really settled on here, and obviously we're just jumping all over, is Bank of America. Let's come back to that for a minute.
I like Bank of America.
I'm looking at a Wells Fargo note about Bank of America saying clean beat, clean quarter, offsetting one-timers, tax benefit, offset by a DVA adjustment, positive operating leverage.
Right.
Charge-offs remain strong at only 26 basis points. The main negative, they say, which impacts results, is net interest income falling $100 million short of consensus.
That's the point that I mentioned, and I think that we really don't want to lose the forest through the trees. The analysts didn't get that right. That's why. The average loan and lease balance is up, nice 10%. Nice net, not a lot of bad loans. Now, there's another thing people got wrong. You'll see that they have to start taking a reserve. That's because of how much money that they lend. They have to do that. The consumer's very healthy. That reserve is not a sign that things are getting bad. It's a sign of how banks have to.
No, but they also have to make predictions for the economic environment, which does lead me back to J.P. Morgan, if I might, for a moment, and what is page 3 of their release this morning. The provision for credit losses was $2.3 billion, says J.P. Morgan, reflecting a net reserve build of $1.4 billion. Net charge-offs were $887 million. So they built more than they charged off. Why? Well, they say driven by a modest deterioration in the firm's macroeconomic outlook, now reflecting a mild recession in the central case.
Okay, so that's not what Brian Moynihan's doing at Bank of America. He's saying, basically, look, things are good. I love this. Record net income of $3.6 billion increased for consumer banking, 15%. They are.
So you think Bank of America has a more positive outlook on the overall economy than does J.P. Morgan? I mean, again, this just goes to what your decisions are in terms of where you want your loan loss provisions to be, your credit loss provisions to be.
Sometimes you ask me questions and there's just a plain objective answer. And the answer is Bank of America has a more positive attitude.
And has for some time.
Yes, it has. And they've got good growth. By the way, technology is playing a big role at Bank of America in terms of their ability to be able to do a lot of transactions and to have expenses come lower. The company we're about to talk to, Larry Fink, BlackRock, that's probably the most advanced technologically of any financial institution. I think a lot of these fintechs that we talk about could learn a lot by being an apprentice at BlackRock.
Yeah. All right, we're about to get commentary. We're probably going to hear from Jamie Dimon on the call. I think he's begun to speak. You know, I downgraded him yesterday from Jamie Hurricane Dimon to Jamie Tropical Storm Dimon.
Right, and I think that Jamie should be starting to talk, but he won't, there's a possibility that after a couple of days of rain, the sun could come out.
Well, I guess my question and point is that we may get some description of the macroeconomic environment from these bank CEOs that could have a broader impact on the market, or no?
Yeah, I think it could, just because I think that you're going to look at and say, wait a second, maybe the Fed should be more considered in the way it increases because they're winning. Right. I think they're winning. There's a bit of a slowdown, and they're winning. And
Dimon obviously pointing out there's still so many unknowns, including the war in Ukraine, including the impact that's going to have on fuel and food.
Well, look, the stock at the bottom, when the 10-year bottom, the stock was at 101.